So good afternoon, everyone. Sorry, now we are now in the evening. So we'll be moving on to another topic, which is another topic that you've mentioned that you have not done in class. So what this topic will be looking, which we'll be dealing with, is contract account. The contract account, we're going to look at it in line with the standard, and I want us to be very careful. That is a topic that is occasionally tested. Are you there now? That occasionally have been tested rather, and it's something that you have to be very careful once you have that in your exam. So please, let's sit back and enjoy it. So we're starting Riskfree standard. So we're having Riskfree tutors here, and the contract accounts in line with IAS 11. I want you to know that IAS 11, as we move to IFRS 15. So what we'll be looking at is contract account. So I have this topic in our manual that we have sent you. So I'm going to just explain what we have in the manual, and then we'll get to see how this is to be. So when we talk about contract account, we are saying that contract account is another form of job costing, which you get to see when you get to costing account, and you can have it in absorption and all the rest. Please, contract account is also something you get to see in government account. Your public sector accounting, you have been taught what we call contract account. With the new standard under IFRS 15, you're going to see more stress points under contract account. But for here, I want us to be very careful that please know that this situation shall be referred to as long-term contract. But the contract we'll be looking at in our class is that which has to do with long-term contracts. Are we there now? And long-term contract, we are looking at contract that will last for more than 1 year. So what are the classes of contracts that we have? There are two main classes of contracts. These are fixed price contracts and cost plus contracts. Under the fixed price contract, we are looking at where the price is fixed or determined before the commencement, like what you have in government contract that you see. For us to build an hostel, the government would have done all the bidding and all the rest, and you'll be told that okay, at the beginning of the job, the people that they would have called the contractor and the contract bidding and all the rest will come out and tell us that the contract is going to be 1 billion naira. Now, haven't given this amount, there could be alteration of prices. Maybe in the future, there might be issues of what we call variation of price, maybe due to inflation or some other thing could arise. When we talk about cost plus, this is whereby the price of the contract is not fixed and they've not determined the amount. So what they do is that the contract is seen as a situation whereby whatever is the cost that the contractor looked at it that, okay, this is the amount I'm going to use to complete this contract. You will add what we call a percentage to it, which is the cost plus, like what we call our margin onto it. So the definition of this following term was something that we used to have in STS 5, which we also have in IAS 11. Although it's still some definition that still work out in what we do. When we talk about construction contract, we are looking at the contract that lasts for more than 1 year. We look at short-term construction contract. I say contract that is transactions are done within short period of time. while long-term are the one that the contract will last for more than 1 year. So we also have what we call revenue realization. At what point will you say revenue is realized? Because when the contract is being done, the contractor must know when he is going to realize his revenue. And the revenue to be realized by the contractor depends on many factors. That as the job that what he has done, can we say there's a good certification for what he has done? Can we say that the job met the proposed government's principle or laid down rule? And does the contract, that means the job that he has done up to date, can we certify that the job is right? So that's when we talk about that. And then the revenue recognition, which you have to look at, that at what point can he recognize that he has made revenue? And at what point can he say that revenue has not been made? So we also look at percentage of completion method. Yes, please.
Did you send this document to us?
This is your Riskfree pack.
Oh, okay.
Page 156.
Well,
And we are now on page 157.
sir.
So this is your Riskfree pack. Have you seen it?
I've seen it. Thank you, sir.
Okay.
Yes, sir.
So we also have completed contract method of revenue, like the percentage completion method. We are having a method whereby you recognize the revenue according to the percentage of the job completed. If 50% of the job has been completed, so the revenue that you will be telling yourself that you have earned is percentage of the job you have completed. Then we also talk about completed contract method, which talks about those methods that you're telling yourself that this is the completed job you have done. Deferred costs. These are costs that you are looking at cannot be incurred now, that can be incurred in future. Contract work in progress. You are looking at those contracts that you have not completed. For example, now if you look at the Lagos-Ibadan Express Road, you have some of the portions that have not been completed, that is still work in progress. Now we have this term called mobilization fee. You're going to get to use more of the term mobilization fee in your public sector account. And there's certain percentage that the government gives to the contractor as mobilization fee to mobilize them to site. Before we used to have it as 10%. I think at one time it was increased to 25. Currently maybe it's 40, but I think you guys, for better viable information, consult your public sector accounting. And I'm sure that is the area of my Oga, Mr. Kinwale. So we also have what called underbilling. Underbilling is whereby you are a contractor have given a bill and you discover that the bill has been understated. So that is an underbill. But if the amount has been overstated, we call it overbilling, and adjustment are done accordingly. Now, in contract costing that we have, there are two basic problems that we always have. The problem is estimating the profit to be taken into the account during the accounting period because of the duration and valuation of work in progress. Now, of all these that we have, I want you to be very careful that whatever method you are using is a method, whatever problem you are facing, you must be able to make sure that you use the utmost right approach to know which value is giving you problem, and you must be able to estimate it accordingly. Now, method of accounting for contract that we'll be looking at, we have number one. There are two methods of accounting for contract. These are architect and engineer method. Then we also have what we call work in progress. What do we mean by architect and engineer method? Under this method, profit or revenue is recognized based on the certification of contractee engineer. I want us to look at this. I'll be mentioning some terms as we move on. When you talk about contractee, that's the person that gave the job out, while contractor is the person that is doing the job. For example, if federal government needs to construct Lagos Ibadan Expressway that we're having now, federal government, that means the federal government of Nigeria is the contractee, while um, Julius Berger is the contractor. So that is it. Now, when the job is being done, the federal government will send its own architect or engineer to go and value the job. And it's not based on what the contractor has done. And say, yeah, I've done 1 billion job or 1 billion naira job. The engineer that the government will send is the one that will say, okay, I think looking at this work and valuing what you have done, I think you have been able to do a job that we can call 1 billion naira worth of job. Now, that certificate that will be given by the architect or the engineer is what the government will pick to tell you that that is the amount you are owing me. And you get to see that as we have. And at the end, you are going to be able to know what is the value of the work certified, vis-a-vis the cost of work not satisfied, in order for you to be able to know what is the work that has been certified and get your profit. Then we also have what called work in progress. The work in progress make use of the percentage of the formula that we have. I will talk about the complete contract method and what we call percentage method. Now, the first thing I want us to note is that in most instances, your ability to determine the estimated profit is what always give the edge to the contractor. And please, when you are asked to compute the estimated total profit, which we refer to as what we call the notional profit, we have this method. But before I go to this method, I want to go to the board where you are going to see how I'm going to analyze what are all those profits to be taken, the profit analysis, before we now move to questions, and then we look at all the objectives. And then the first thing we are going to do will be this question number one when we move. But before we get to that point, let's see some analysis that I want us to look at. Some people have been waiting. Okay, I think I have them all in now. Okay, let's start. At the beginning of the class, I've been able to tell you who are the parties to contract account. In looking at those parties, we've been able to look at those parties in terms of their operational thing. We said that when you look at contract account, we are looking at two parties. The parties we are having what we call the contractor and who we call the contractee. The contractee is the owner of the tax, while the contractor is the agent to execute the contract. So having known these two guys, the thing that is always the bottom line in everything that we do in contract account is the method of profit computation. We look at what is the method of profit recognition. How do we recognize the profit? There are many methods that we have. I'm going to start with the first one, and I'll let you know that this first method has been taken off the table, but in case you see, it's called the rule of thumb. We have it 2/3 times cash received all over value of work certified times what we call estimated total profit. That is the first method that we have. There's another method in which you can use to calculate our profit. That is value of work certified all over contract price times estimated total profit. That is the second method. Now, the third method that we also need to look at is what we call the cash received all over contract price times estimated total profit. That is the other method. Now we also have another method, which is cost of, I want you to have the inks not looking too close. We have cost of work done all over estimated total cost of contract times estimated total profit. So we also have another method, which is the fifth method. Another this fifth method, we have what we call value. Okay, I think you guys can see this ink. We have value of work certified to date compared with the cost of work certified to date. You can see this is the difference between value and that. So, and any of these methods could be used. But I want to draw our attention to something, that this method have been described as a method that have been abolished. But I get, to my surprise, that if you are given short answer, sometimes you will see that you might be asked, what is the method of calculating profit recognition? And they will still state it there. So please be very careful about that. Now, if you look at all what we have gotten here, something is constant. Estimated total profit, estimated total profit, estimated total profit, estimated total profit. How do we arrive at the estimated total profit? Because that is the flagship of contract account. So let's look at it. It is also referred to as what called notional profit, or say estimated total profit. So please, let's see what we have. This is comparing the following information. One, we need the information of what we call the contract price. The contract price is the total sum in which the contract is quoted. And this will be compared with the following information. One, we have what we call cost to date. Our cost to date is made up of two information: the total cost incurred to date. That means whatever is the total amount that we have spent to date, less whatever is that cost. Are we there now? Whatever is the cost that we have incurred but we have not utilized. So we now say cost incurred, not utilized. For example, you might have some element of raw material you have bought, which you have paid for, but you have not used. So it means those values will be taken off. And when you take that off, that gives us what we call cost to date. So that's our cost to date. The difference between these two will give me cost to date. Now, that is not the end, because in contract, we don't just look at contract as cost to date. We also look at what are the costs that we need to complete the contract. And those costs must be taken into consideration. So what is that cost that we need to incur to get the contract to date? We call it future cost, or we refer to it as what we call cost to completion. Cost to completion. So what's our cost to completion of the contract? That means those costs that we might need to still incur in order to bring the contract to a close, or something that we will incur to make sure that we complete our contract. Number one, we might need more material. Number two, we might need what we call some expenses to be incurred. Maybe some other thing you have to buy. Then you also consider material needed. I've said this. Then note also that the materials at site that you have not used, which are part of some of them not yet utilized, you still need them. You put them there. Then if you now have assets, like for example, this asset is very, very germane, you need more PPE. Like I will give you this instance. If you are looking at organization, like for example, maybe Julius Berger needs to build a bridge and they need a particular equipment. Because of that contract, they might have to go and incur that contract and buy that contract in order for that project. So the plants that we need, and I want you to know plants and equipment, whatever they are, must be accounted for. If there's still anyone that we need to employ, which is at this carrying amount, we'll reduce whatever is the residual value that the contract expert would have told us that we don't need. So we'll take that off the table, which is the residual value. So when you add all this together, I will add it to this value, and whatever I get, I will subtract it from my cost of that. And what we call that is called estimated total profit. Do we get that, please? Now, this which you have gotten here, this value here, is referred to as what called total estimated cost. So your short answer, you might be asked, what is the estimated total profit of a contract or notional profit? You can simply just say the contract price less the total estimated cost. Why the total estimated cost is the combination, the addition of your cost to date and your future cost. Do we get that, please? Any question? Any question, class? Okay. In the absence of no question, let's now look at the method of accounting. As I've said to you earlier, I said there are basically two methods of accounting we'll be looking at here. We have the first one that we call the architect method, and we have the second one which we call the work in progress. Under the architect method, the following ledger will have to be prepared. Books, we have what we call the contract account. We also have the contractee account. Then we also, after the contractee account, we also talk about the retention account. While under the work in progress, we are still looking at the same ledger. You have it as contractee accounting. You also have your retention account. Your retention account. But please, we'll also likely be looking at what we call the statement of financial position in terms of the analysis of what we are looking at here. So, all what I've said is very simple, but I always like using formats. And I'm sure you guys get to know that I love this format in terms of teaching you in accounting. So this format, what I wanted...
Mr. Emma, please take it back.
I should take it what?
To the previous page. I'm still writing.
Which one are you writing? This?
This one, yes, sir. Yes, sir.
But you know, electronically, you can still get this. Okay? You still have some of us that are writing. It's all right. Balaon, you are there. Where is Daniel? I'm not seeing Nike on this line. Gabriel, are you sure that Nike is also joining us?
No.
No, all these, after the class, do you guys have chats to do YouTube? No.
Yes.
Okay, I'll chat out. Can we go on, class? So let's go
Yes,
to the
sir.
first, let's go to this first method, which I describe as what we call architect method. And in there, under this method, what is it, please?
What did you just ask?
Gabriel, I said, Nike, do you have any view if she joins us on YouTube or after this class, she has the opportunity of watching it on YouTube?
Yes, she has the opportunity.
Okay, thank you very much. Okay, thank you. Let's go on. The first thing we are looking at under the architect method. I hope my handwriting will take this. We have the architect method. The architect of the spelling is all right. Architect method. So what is the first account we are asked to prepare? Contract account. Please, and most time in your exam, you might need to state the nature of that contract, maybe number, or you tell us what is that contract all about. So this is the contract account. And because that contract account can flow into the next information, so that's why I'm going to take this as my continuation of contract if it gets there, but if it doesn't, we'll move up. So please note, under contract account, we are simply looking like our normal expenses and income. You debit all the expenses. All the expenses will be here, which you need to note. And then all the income will be on this side. So what are the expenses? I want to ask. If you are doing contract that you can incur, you have thing one, we talk about wages. that you pay to laborers. Apart from wages to laborers, you can also have what class? Materials. Now let's be careful about these materials. You can have some material issued from store, because if you are going to a contract, you might have some material already in a store, so you move it to that site. You can also have the ones that you talk about transfer from other contracts. Maybe you are doing two contracts together, so you can move it from one contract to another. Then you can also talk about the third aspect of it, which you can purchase. So you can see for material, is either you issue it from the store, you transfer from other contract, or you purchase. So that is for material. Now, what are the other expenses that you can incur when you are talking about contracts? You can talk about what we call contract overhead. The word overhead just means expenses. So don't let someone scare you. Contract overhead. Apart from contract overhead, you can also have what we call situation whereby you have to go and hire PPE. Maybe the contract you are doing, you don't have a particular equipment, you can go and hire it. Instead of you hiring that PPE, you might be somebody that have the money to buy the PPE. You can talk about acquisition of PPE. You will go and buy it. In contract, I haven't talked about all these other ones. What are the other jobs you can also look at in contract? You can look at what we call electrical work. What are the electrical works you can also have? Electrical work. Apart from electrical work, please tell me what can also happen in contract. We can also talk about repairs of the PPE. What else can we also have? Help me, class. What are the examples you can also have when you are doing contracts? You can have whereby the head office
Feeding the employee and the workers.
Pardon? What did you say?
Feeding the workers. Like
Yes,
probably
okay.
you make
I want to take
arrangements.
it to this side so that we can have more space. We can also talk about this. They are under each other. According to what you have said, you can also talk about staff welfare. Apart from staff welfare, what else can we also look at? You can also look at head office costs. Maybe they need to incur some costs bringing people in. Now, there's something I want to bring your attention to. If you are told that any of these expenses have accrued, you have it here, accrued expenses, you adjust it to them. Or you are told that there's anyone that is outstanding expenses, you also insert that. Now, if there's any of those expenses that is being prepaid, you can easily remove it from here, or you put the prepaid expenses on this other side. This is just a ledger form of recording. Now, at the end of the day, all your expenses would have been accounted for. You now have to ask yourself, is it all the expenses that you have utilized? If the answer is no, if it is not all the expenses that you have utilized, you now bring them here as what called balance carry down. And most of the items that you always have that you have not utilized is your material. You always have your material balance brought down. Are you there? Most times, these are the material at site. That means they are still on the site at the end of the financial year. Then you can also talk about some of the assets that you have bought that their useful life can still be utilized. We talk about PPE, their carrying amount. So that will also come there. Now we are getting to the end of the contract. At the end of the period, the engineer from the contractor, from the contractee will show up. And he will look at some of the jobs that have been done that are not satisfied. Oh, that this job does not meet standard. You refer to that as what called cost or work not certified. Are we there now? Cost of work not satisfied. You will put it there. Now, all these that we have done is the beauty of the contract. But this is where we are going. Having gotten all this figure, there will be a balancing figure. And that balancing figure is our main aim of why we are preparing this ledger. Because we want to be able to know the cost of work certified. Now, this will now be the balancing figure for me to look at the cost of work that have been what? Certified. Now, that cost of work that have been certified will be transferred to the lower part. I'll write it as well. This is cost of work certified, balance carried down. So I will call it a work certified. Work certified. Balance brought down. Whatever is that amount here, as my work certified, which you would have seen, maybe my balance will now come here as balance brought down. Then the following question will be asked. How much is the government going to pay? And for me to look at how much the government will pay, that is now where this method derives its name. And the amount which the government will pay is called architect certification. So the person who is the architect of the government will now show up. He will now give us what we call architect certification. And please, that architect certification is also called value or work certified. You can see the name. It's called value or work certified, not cost. It's called value or work certified. So at the end of the day, we will now be able to get what is our profit. And that profit is now where we need all those formulas that we have written. So we are going to look at what is the profit taking, which we are going to compute. And that is the end of this portion. If I get all this value inserted, the account should balance. But where there's any shortfall, and there will be, in case the examiner wants to test your ability on contract account, if there's still any shortfall here, which there's a balancing figure, we refer to it as what we call profit suspense. And this is the ledger for contract accounts. Having finished contract account, the other ledgers that we always have is what we call the retention account and contractee account. So the first one that we always have is what we call the contractee account. Who is the contractee class?
The
Owner of the contract.
the owner of the person that is giving the contract.
The person that is giving the contract. Good one. So in that case, the first thing that always bill his own bill is what we call the architect certificate.
Money class.
Or we call the engineer. So that is the architect or engineer certificate. There, the money will be paid. Whatever amount that is being paid, it goes to bank. And how do we know that? It's called progress payment. That is the progress payment. And at this point, the examiner will also provide to you, maybe there's a retention that they won't pay. But I would like to ask this question, class. Why is it that government or even the contractee will have to retain certain amount of money given to the contractor? Why?
So that in case what the contractor did flops, maybe he did the wrong job,
Yeah, so in case
we will be
whatever
able
the contractor
to.
have done does not meet process, so you will just collect that. So you will retain the money. So for you to look at best of purpose. So these are the amount. Any balance that you have here left, which is the balance brought down, please class is always taken to current assets of the contractor because it means that is still the amount collectible. Then our retention account can also be prepared. On our retention account, we can have the balance record. Are we there now? Then we also have whatever they paid out of it. It will be recorded. Whatever that amount is will be taken into consideration. So we now have the amount that the contractee is adding to the retention. So whatever is being paid goes to our progress payment. And at the end of the day, we also have our balance carried down, which you call me as balance brought down. Most times, if you are given contract account, all these informations are usually provided. You see that the examiner will state all the figures. It's just for you to post them therein. So what we have done now is what we call the contractor's account using architect method. And then now, if you are using the other method that will refer to as what we call work in progress, please note that the work in progress also have the same similar treatment like the way we have done earlier. The only difference is just that we take the work in progress. We look at using work in progress. So let's have a contract account. Under the work in progress, you can have what we call balance brought down from the previous contract. But if there is none, you can only have a balance brought forward if that contract is a continuous one. But if not, please, you are not going to have such. So you can have all the expenses. Can you give me all the expenses that we can incur in contract? Give me wages. Oh yeah. I need your help. Material issue from store. Then you can have material transfer to contract. You can have the one that was purchased. What are the other expenses you can have? Class, acquisition of PPE. Apart from acquisition of PPE, which other one you can also have? You can also hire the PPE. What other ones can you also have? You have the electrical work, which we have said earlier. You can also have others. Let's not waste more time. And like all the other things I've given to you, outstanding and all the rest. For these two, you also have all those expenses that you have not been able to utilize, such as your material, such as the PPE carrying amount. Apart from the PPE carrying amount, you pick all the values, and then you now have all your records stated in. Please, under this method, whatever is the architect certificate will be inserted straight, which is the engineer certificate. And please, which is also called the value of work certified. Then we go get our values. And in getting our values, we are going to work it out. But under work in progress, the examiner is always very magnanimous. Like they will give you what is the work in progress at end. You write the value there. But if it's not given, you'll be guided on how to compute it. You'll be told maybe certain percentage of their work. Then you now look for what is the profit to be taken. That one will be worked out. Profit taking. All things being equal, the account should balance. But where the account did not balance, whatever is the difference, which is a balancing figure, is always referred to as what called deferred profit. Is always referred to as the balancing figure here. Is always referred to as the word deferred profit. Is always referred to as deferred profit. And that is the end of contract account using the two methods. Any question so that we can move to question 1 and we'll solve. Ejo, fún mi answer. Any question, class? Ejo, down. Okay, you are just absorbing. Any other thing? Okay, let me just give you a lesson.
Yeah.
I'll call it notes. Is that under the work in progress method, the extract in statement of financial position must consider the following adjustment. And what is that adjustment we are looking at? Is that whatever goes into our current asset of the contractor must be adjusted as follows. My work in progress at end, whatever is the value, must be net with what we see or arrive as deferred profit. It is a rare occasion that you see this question, but in case you have it, you will get your full marks. Any questions so we can solve question 1?
So please, can you read what you wrote? Can't see the handwriting. From
Okay.
that blue ink.
I said the current asset, which is the current account. How about this? In the contractor. So we are going to look at we must look at the difference between work in progress at end compared with what we call the deferred profit. So that is that. Any question?
Sir, please, no, sir. Please, previous page. Thank you,
So
sir.
we look at this method. After this, we looked at how to prepare our ledger using the contract account. After that, we looked at the contractee account. After the contractee account, we look at work in progress method. Then that is it. So let's solve question 1. We have question 1 in our pack. What page is question 1 in our pack?
Page 159.
So we are using Riskfree pack page 159. Okay, let's look at what the question looks like so that we can get this done. This is the question. So can somebody read the question for me?
Uche NYSC Construction Limited was awarded a hotel complex contract by the Ogun State Government on 2nd of January 2000 for 600,000 naira. The contract work started on 4th of January 2000 and was expected to be completed on 31st March 2001. The following costs were incurred on the contract to 31st December
Okay, all
2000.
those costs are correct. So as at 31st December 2000, the following addition expenditure were expected to be made to bring the contract to completion, in which you see the wages, material exclusive of stock at site, and then others. Then we are told on 31 December 2000, unused material at the construction site was valued at 7,500. The book value of the plant purchase is expected to be 3,750 by the end of the contract, by the time the contract is completed. On that date, estimated cost of work done but not yet satisfied was 25,000. Total amount received by the contractor from the contract was 400,000. We are told the contract account to 31st December showing appropriate transfer to profit and loss and contractee account. That is what the examiner wants. So I'm giving you some time for some of you to screen grab it or screenshot so that when I'm working, I work with what you guys also have. Okay? Any question? What does the examiner want us to prepare?
Required, show in the books of Uche Construction Limited the contract account to 31st December 2000, showing any appropriate transfer to profit and loss account. B. Contractee account at 31st December 2000.
Solid reading. And I think I enjoyed that reading. And we can all see how solid the reading was done. Okay, let's look at the solid reading and then we'll consider the solid solution. Now, what the examiner wants here is for us to prepare the contract account. So what's the name of the contractor? That is Uche. NYC Construction Limited. Then I have my contract account. What is this contract for? Hotel what class? Complex.
Hotel complex contract.
So in case my ledger might get to this point, but please don't forget, it's because I'm not using my board or I'm not using a note that I might not get to that point as I'm even going, if I can manage it here. What's the other account that the examiner also wants? He wants the what?
Contractee account.
Contractee. But that contractee has a name. So I have to get the name. Who is the contractee?
Ogun State
Ogun
government.
State,
Ogun
State
State
government.
Yes, sir.
So we use all these places while working. Now, reading through the question, I was told that the job started. So I need to do my workings to get some information. The date of commencing the contract, commencement of contract, is what date? 3rd of January. No, 2nd of January. I have it to be my 2nd of what? 2nd of January 2000. And from there, I was told that my contract price is how much, class? 600,000. And the contract was started on the 4th. So it's not 2nd of January. It started on the 4th. And I've been told that the contract will go on till 31st of March 2001. So I need to know my duration of contract. How many months will that contract be done? From January to next year, March. How many months is that? How many months, class? From January
15.
to 15 months. So I have the 15 months. You will see why this 15 months is very important when we move. So we are now told that these are all the costs that was incurred for 2001. So sorry, for 2000. So let me go to all those costs. I'm working in Naira. So what was the first cost that was incurred?
Wages.
How much?
227,500.
Okay. What's the next one I have? Material. What's my material? Issue from store. How much?
65,000.
How much? 65,000. The material issue from store is 65,000. Next.
Material direct purchase 25,000.
How much?
25.
Next.
Contract overhead.
So I have my contract overhead. How much is that?
15,000.
Next.
Hire or plant. Hire of plant.
We have to
5,000.
hire a plant. How much is that?
45,000.
Next.
Plant purchase on 3rd of January. 22,000.
Plants. How much?
22,500.
So what is the next item that I have? None. So these are all the expenses I incurred for that year. You can see I might not even need this ledger. I've just written it so that I will not have issues. So what is the next information that we have? Let's go to the next information. Can you take that from the next preamble? What do we now have?
Wage as at 31st December 2000, the following additional expenditure were expected to be made to bring the contract to completion.
So these are
Wages,
now
25,000.
These are now expenses we need to incur to bring our contract to a set. Once you get that information, that is another working. So let me call that working 3. So that will help me to compute my notional profit. And what is the word notional profit? To know my total estimated profit. And in doing this, I need all the informations available. Thing 1, I need the contract price. What is the contract price?
Contract price is 600,000.
Now, and I need my cost to date. So if you look at it, what's the total cost that I've incurred? If you add all these costs that we have now, what is the value? What is those costs?
Coming. 60.
I guess it's 400.
400,000.
Thank you, 400. Now, do we have any cost during the period that we have not utilized? Cost not utilized. We don't know that yet. When we get there, we'll get that amount. But we have been told that there are some costs that we now need to complete the contract. So we refer to those ones that what called completion cost, and which is given to us in the question. So can you list them out for me? We have wages.
Completion.
How much?
Wages, 25,000.
25,000. What's the next one?
Material, exclusive of stock at site,
So we have the material
22,500.
needed. How much is that?
22,500.
22,500. Don't forget at site. We don't know that one yet because we need to calculate the one at site. We need to calculate it. Next, what are the other expenses required?
Others, 20,000.
Others,
Yes, sir.
20,000. Now, all this information have been given. The examiner now went further and said, on 31 December, unused material at the construction contract was valued at how much?
7,500.
So that will help us here first. Balance carry down, which is for my material. So I take the one for materials first. That is 7,500. Are we getting that?
Yes,
And
sir.
I need my cost not yet utilized. I'll quickly go to my page working here. I'll come here, I'll say cost not utilized. It's combination of two things. My material at year end 31/12/2000. I have that as 7,500. But I need the second one, which is the plant carrying amount. So what's my plant carrying amount as at 31/12/2000? Note very well that my plant that I'm looking for here, that is the carrying amount, is the plant that I've bought, not the one that I've hired. So how will you now get to know the plant carrying amount at the end of the period? So I want to know the plant carrying. What's my plant carrying amount? At what date, class?
3,000.
31/12/2020. What do you have in your book?
3,750. The book
I
value of
disagree
the
with
plant
you.
purchase.
Look at what they said. They said the book value of the plant purchase is expected to be 3,750 by the time the contract is completed. And when will the contract be completed?
The 31st of March 20.
So it's not the same thing. What we are looking for here is what is our carrying amount as at 31st of December 2020. It's very simple. We want to look at total depreciation of the plant. How do we get the total depreciation? Cost. What's the cost of the plant? 22,500. Then what is the residual value of all the depreciation that we are going to have? What will be the value?
3,750.
No, the cost is 22,500, and the residual value for the entire month that we are using it is 3,750. So what will be the total depreciation of the plant?
Okay. 18,750.
18,750. Now be very careful. We are saying that this plant, we are using it for 15 months, and it will have a total depreciation for how many months? Total depreciation will be 18,750. So if I want to know the depreciation for 12 months, what will I do? I will now come and say 12 divided by 15 times what? 18,750. So what will be the depreciation for 12 months?
15,000.
15,000. So will I now be right if I now say the plant, the cost is 22,500? Then my total depreciation for 12 months. Are we there now? For 12 months,
yes, sir,
which is from January to that, is 15,000. So what will be the carrying amount at that end of that 12 months?
7,500.
7,500. You can see all the journey we went to. So it means that the carrying amount of the plant at the end of the year, which is plant, is 7,500. Which simply means that my cost not utilized is 7,500 plus 7,500 will give me what, class? You give me how much?
Sir?
The cost not utilized will now be 75 plus 75. Okay. That will be a total of how much?
15,000.
15,000. So if I take away 15,000 from 400,000, what will I have left? and my cost to date.
385,000.
385,000.
So please, can you explain this cost not utilized again?
Thank you. We have said that we have incurred cost of 400,000 naira for the whole year, but that cost was not totally used in the year 2000. One of it is the material. We are told that the material on site still remains 7,500. We bought it in 2000, but have we used it?
No, sir.
No, thank you. Then we now bought a plant again that we have said this plant, we are going to use the plant for 15 months. At the end of the 15 months, the plant will still have a residual value of 307.50. What we are simply saying is that the entire value that we'll be using on the plant is 18,750. So how much of that have we used in 12 months? If you are saying 18,750 of the cost of the plant is what is attributable for this contract, and that would be 15 months. So how much will be accounted for in 12 months?
That's 15,000.
So, and it means that the plant will still have 7,500. So, which means that the cost that we have not been able to utilize as at 31st December 2000 is 15,000. So, the actual cost that was actually incurred in 2000, as at 31st December 2000, is 385,000, not 400,000. Because out of that 400,000 we spent, 15,000 is still yet to be used. So that is that. So we can now wrap up this by now looking at what are the costs at the end. So my cost at site for the material is still 7,500. Then for the plant, what is the carrying amount of the plant?
7,500.
7,500. But don't forget, we are not using the entire 7,500 for the contract. Because we said out of that 7,500, there must be a residual value of 3,750. So how much will be still needed for the contract? 3,750, I guess.
3,750.
Now, and I need your help. Please, can you add all these together so I can know what is the cost of the future cost or completion cost?
$78,750.
78,750. Now, if I now add these two together, I need to get my total estimated cost. So what is my total estimated cost?
463,750.
463,750. Class confirm. So if you now deduct that from our total estimated cost, so from our contract price, so we'll now be able to get what is our total estimated profit. So what's our total estimated profit, please?
136,250.
136,000. Kí lẹ pé ẹjọ́?
136,250.
136,250. Any question? So we've been able to get all those. So let's now see what the examiner still explained to me. You can see one line of a statement is what took us to all those long computations for assets. So I haven't gotten that. We'll move on. Now let me tell you, this is the only question that you have to calculate. Subsequent question that you say, you just see that the examiner provides you with all the necessary information, and which I will show you, and also give you an assignment which you will get to see. Now we said that the book value of the plant purchase, we have done that. Then the value of work certified as per architect is how much? How much was certified by the architect?
It was 450,000 naira.
So I will bring that one here. I'll call it architect certification. That is 450,000. And that is what the contractee will recognize that is owing. So I'll bring it here. Architect certification. So that is 450,000. Okay. What's the next information that we have?
On that date, estimated cost of work done but not yet certified was 25,000.
So we are going to take work not satisfied. So we say work not certified. How much is the work that has not been certified?
25,000.
So that is that. Next, what do I have?
Total amount received by the contractor from the contract was
So the
400,000.
total amount that has been received by the contractor, which is bank, and which we refer to as what we call progress payment, is how much? 400,000.
400,000.
So any other information? None. So we can now wrap up our account. Now the first thing we need to do here is for us to know what is the cost of the work that has been certified. I need your help. This is 400,000. So what is the balance figure we need here? So for us to get work certified,
360.
that is 360,000. So I'll bring it here. I'll say work certified, 360,000. This is 400,000. This is where the work is. What is going to be the profit taking? We need to know what will be the amount of the profit to be taken. So we'll now go to our steps of formulas. We'll pick it one by one. So let's take the formulas available. The first thing we are going to look at in the formula is the one that talks about cost to date. So let's see, computation of profit taking. We must pick the lowest of them. So we have cost to date. The first formula we are considering is the one that talks about cost to date divided by total cost times total estimated profit. What's our cost to date, class? Let's go back. What's our cost to date? It's in front of you now. What's the value of our cost to date? 385,000. And what's the value of our total cost? 463.
Total cost 463. 463,750.
So let's get this now. Our cost to date is 385,000, and our total estimated cost is
463,750.
Okay, thank you. 463,750 times our total estimated cost. Sorry, total estimated profit is 136,250. Give me your answer, please.
113.2.
So let's take it 113, 113,
113.
113. Let's take that value. Let's go to the second method. This is 1. Let's go to second. To the second, we are using the value of work certified. So look at value of work certified divided by contract price times total estimated profit. Our value of work certified is 450,000 and our contract price is 600,000 times 136,250. What is the answer?
One zero two 187.5.
So we have 102, one what class?
187.5.
188. Let's take it approximately. Then the third step is for us to compare, which is the third one. We said value. Let me take the third one up here. Value of work certified, which is 450,000 compared to cost of work certified, which is 360,000. What's the difference of that?
190.
Now, class, out of the three elements, which one is the lowest?
90,000.
And I'll still tell you why we are picking 90. We would have just used the first two, but we can't use the first two because if you use any of those first two here, the value will be higher. If I've used any one of them, saying maybe 100 and something thousand, the value will be higher. So the best value to use here is 90,000.
So what about that other formula that is 2/3 times something?
It is abolished. It has been abolished.
Okay.
I told you that you don't say it because it's rule of thumb. 450,000, 450,000. And that is what we have. So what's now the balance that we have to collect from the contractor? There's no retention.
200,000.
You're on your own. 450,000 minus this, minus 400,000.
50,000, sorry, sir.
So that is that. Any other question?
Mr. Emma? It is well, oh.
If you look at it, you see that there's not
Tema, please go back to the beginning. I want to write them down. Yeah. Mr. Emma. So next page.
Wait, you.
This thing is long.
Very, 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 very technical.
On top self and a half marks. Big.
Ah. This time, you can move on.
Timer. Next. This timer. Mr. Emma, we can't hear you.
What is this? Is it not the same thing that we did?
Can you hear me now?
Yes.
Pardon me?
Yes, sir.
Yes, it looks like the same thing, but it's not the same thing. Yes, we are now we are using what we call work in progress method. So what is the material? Material issued from store. Please, can I have that?
65,000.
65,000.
What is the material purchased?
25,000. Sir, which book is this? Which book is this?
Which book? It's still the contractor's account now.
Work in progress.
Work in progress method. Yeah, now we are now looking at what we call work in progress method.
Okay.
Now you will see it's still the same account that we are doing. You just see where there's a bit of difference. What's the value of the overhead?
Overhead, 15,000.
15,000.
Just copying out what you have given me before. Hire of plants. Hire on plants.
45.
How much did they use to hire plants?
45,000.
How much did they use to purchase plants?
22,500.
And that is it. So what are the materials that they did not use in the store? The material they've not used in the site. 7,500. What is the plant carrying amount at the end of that year? Is also 7,500.
7,500.
So in this case now, there's nothing like work not certified. We just come to work called work certified by the architect. So how much was the amount that the architect says is entitled to?
450.
450.
450.
Then you just come here and go to the profit taking. Now in this one profit taking, let's go back to where we look at this method. We are not going to consider this third one because this third one is just a simple balancing figure. So we are going to look at this. Which one is the lower of the two values?
102, 188.
And do you know why we cannot even consider the third method? Because there's no information on cost of work certified. So that's where I want you to pay attention. Because under work in progress, you will not account for the cost of work certified. And if you don't have the cost of work certified, you can't use that formula. So you are only left with these two formulas. And that's why we are taking the profit here to be one. What's the value? 102, 188.
188.
You can see how simple it is. So what you are now going to tell me is what is the balancing figure here. And that balancing figure is referred to as our work in progress value. What is the difference? Can you see how sweet account is?
502,188.
What is the balancing figure?
502, 102, 108.
So the total here is 502,
188.
188.
188. So if I have 502, 188, what will now be the balancing figure?
37188.
37188.
Good. You can see those people that have bought calculator for 37,188.
108.
And this is
188.
502, 188. So it's good to have original calculator. And it is somebody that have attended University of Lagos or somebody that is attending University of Lagos that will have that such calculator. Sorry, all
Mr. Ma,
Bangkok.
what do you mean?
Sorry, all Ikorodu.
Yeah.
Sorry, all Lasu. So that is that.
Sorry.
Any question?
Sorry.
Now,
Yes,
is
sir.
how simple
Yes,
this one
sir.
is. Pardon?
Sir, is it possible for us to use this method instead of that other one? If they give us contract
Oh, it's
account.
not possible. The examiner will tell you the one to use. So don't think you will just come and pick anyone you want. The examiner will state
That one is
what he wants. That one is
very complex.
because you have to do some workings. But I want you to go to the next question. I think that is question number 3. You will see that in that question number 3, you are not doing any working. Let's look at question number 3. And you see how beautiful that is. You are not going to do any workings. In case you have to do workings, that's why I have to give you that one.
So what about this
question
number 2?
Mr. Ma,
yes, please.
Do you really pray for
Sir, what about
this
question
kind of
number
question to come out?
Gabriel, you know what?
Sir, we don't
question number 1
Yes.
is a question that when it was asked, a lot of students failed it. So let me teach you. Then let me now teach you the regular one again. I don't know whether I'll just be teaching you simple things. I'm sure when you guys look at the questions I saw, they look so complex and things that you pray you should not come out. But in case they come out, that is why you guys are at risk-free, to be more taught compared to other colleagues. Let's just look at something. I want you to look at something and you will get to see it. Look at, for example, question number 3 in your pack. When you look at that question number 3, you are not going to see the long thing that we saw in question number 1. Although they might say I saw this definition, which I've told you earlier. Now look at this. They just said, extract from the book of Express Construction Limited. Look at what you are asked to do. Prepare the following accounts in the book of Express Construction Limited. Modern Market Contract Account, Sabina Local Government Account, and Retention Account. If we go through all the questions, there is no need for any calculation. They've given you all the figures, just insert. So let's now solve this simple one. I think you guys have it already. Question number 3 is on page 160 and page 161. So can I solve?
Mr. Emma?
Yes, ma'am.
Is the contract account this thing we did now, is it the same thing as columnar contract account?
Thank you. The columnar contract account that you have in question number 2 is a situation whereby you are having 2 of the methods side by side. It's like telling you. What did you say? You don't pray for it.
One finish. So
I've
not let one finish. You now to have 2 side by
side. It can only be done in risk-free. Do you want us to teach you poison? We must teach you everything right. So if you look at it, but I want you to know very well, it's not too difficult. The column A is talking about architect method, while column B is talking about work in progress. So let's quickly look at question number 3. That one is very simple, straightforward. What are the ledgers that the examiner wants us to prepare?
Modern market contract,
Mm-hmm.
Sabina local government account,
So let's just look
and
at question
retention
number 3
account.
so that we don't waste more time. That is question 3 on page 116 and 161 of Riskfree pack for ATS 2. You see in this one, we'll just be picking figure. What's the name of the contractor? Express Construction
Express Construction Limited.
Limited. So the first account they want us to prepare is the what? Modern market. Modern market contract account. So we have the modern market account. What is the second account we have to do?
Sabina local government account.
Sabina local government account. And we all know Sabina local government will be the contracting. Gabriel, you can see how this one is simple now. Will it come out in the exam? Gabriel is silent too. So, having done this, all what we just need to do now is pick and drop. If you are there, I am there. Are we moving? So as you are all there, you are now to give me all the information in the question. So those informations are now what I need to fix in all my information. Lights on, are you having any issue? I can see Vanina, you went out and you came back. Where is Gabriel too?
Yes, sir.
Okay, where is Gabriel? Should I continue with the question?
Yes, sir.
Okay, so while I continue, I need you guys to give me the information as we have.
Sir, he's here.
So what's is Gabriel back?
Yes, sir.
Okay. What is the first information that we have?
Plant and machinery.
So our plant and machinery, where will it go to?
Contractors account.
Contractors account. Do we debit or we credit?
We debit.
Debit.
Okay, you can see now we are just picking this figure and we are doing what we need to do. The Naira. So I have my plant. How much is it?
125.
1,225.
1,225. Next item, what do I have?
Wages.
Wages.
So wages, how much?
390.
Next, what do I have? Materials. How much? 1,495. Next, what do I have? Electrical work. Your data is
1,495. 1,495.
Okay. Next, what do I have?
Electrical works.
I've done electrical work. What's the next one?
Carpentry and.
So I have my
carpentry and roofing work.
Carpentry and roofing. Please don't use the and symbol. You must write it out properly. Carpentry and roof. How much? 450.
450.
Next, you are reading for me. What's the next item?
Salaries of foreman and supervisors. 200.
So we have salaries. How much?
200.
200. Next, what do I have?
Fuel and maintenance of plant and machinery.
So we have
150.
fuel and maintenance. How much is that?
150.
Next.
Balances at 30th September
So they are
2008.
telling us that we have balances at the end of the year. So what are the balances?
Plant and machinery 300.
Plant and machinery. You can see we don't need any working. Just fix the figure. Next.
Materials 500.
Materials 500. Next.
Work certified during the year
So we
5,000.
just have work certified. How much is it?
5,000.
Work certified. Is that what you said?
5,000.
Work
Yes, sir.
certified.
Certified.
So
Yes,
if that
sir.
work is certified, that is by the architect. So I have to move that down. So that will be architect certification. That is 5,000. Next.
Uncertified work at 30th September
So we have work
2008.
not certified. How much is that?
200.
Next.
Retentions at 1st of October 2007. 250.
What is the retention? So we take down and balance brought forward.
Brought
How much?
forward. 250.
250. Next.
Progress payments received during the year
So we
4,000.
have progress payment received during the year, which is going to the bank. That is progress payment. How much is our progress payment?
4,000.
And please don't forget, our architect certificate confirms on the contractee the amount that is owing. And that is 5,000. Next.
Retention during the year
How much was the retention during the year?
150.
Retention during the year, 150. So I bring it here, which is from Sabina, local government, 150. Next.
Progress payment receivable at 30th September 2008. 850.
850. So that means
Yes.
there was another
850.
progress payment. No, they said progress what? Receivable. That is still what we're having.
Receivable.
Receivable. That is the balance that we're having. We don't even need them to tell us that. We should know it. What is the next thing?
Profits to be taken for the year 800.
They've told us the profit to be taken already. We just come here, profit taken. So you don't need to calculate. What's the profit taken?
800.
800. Next.
That's all.
That's Neka de Mashile from
Gable?
Yes,
Can you
sir.
see how this one is very simple? So we wrap
It's
up
very
all
simple.
this. So I won't want to start with this. And some of you, when I now do the other, I'll say you want to do. So we just balance this account and then we look at it. What is the total on this debit? Because we have the need to look for the cost here. So yeah, we need to know what is the work certified. So what's the balance? So we'll now bring it here as work. This is work certified carried down. This is work certified brought down. So we'll just balance this. I think this one is 0, 0, 3, 400. Balance brought down 400. Yes, I'm listening.
The debit side of the contractor's account
Is how much?
4210.
10. Okay. So what's now the balance carried down?
3210.
3210. So I have a 3210. And this is 5,000. So that means something will exist. And I told you that what will exist once we are having issue with once we have taken our profit, something will now exist. I will call it profit what? Suspense. So
Profit
what is that balance that we are
suspense.
looking for?
990.
Profit suspense.
990.
So what's the difference? 900 and what?
990. 90 naira.
So that is all. So we bring all our balance brought down now. What were all those items that we have not used? Plants. That is 300. We also have our what? Material. That is
Materials
500.
500.
Then what else do I have? Work what?
Work not certified.
Work not certified.
Not certified. 200.
And that is the end of this question. Ejo, that is question 3 done. Is it difficult?
No, sir. Mr. Emma, please, previous page.
Previous page. There's no previous page on this one. This one just have one page. There's no previous about this. All the solution is on one page.
I did not.
Here is this one. This one was question number 1. Using work in progress. That is the same thing you will get if you move to the next question, which is question number 4. So you just get to see that we are just fixing all the figures. And that is the end. Any question? What is
Time we are going over it to DM you very well.
Yes. Me, you know, I'm always available for the DM. And I will always make sure that so I'm going to send a classwork to you. So I have an assignment that I will send to you, and I want you to attempt that assignment. Once you give me your own view, I will now give you my solution. I don't know which one that you call your normal class, because I'm sending the assignment to you now. So the assignment has been sent to your WhatsApp. I have it ATS2 online. So that is assignment. So assignment on contract. So once you guys start giving me your own solution, then I'll provide the solution for you. Any other question?
Mr. Emma, since they postponed the exam dates, is Riskfree going to have another class on Sunday?
That I can't say. I think the registrar will let
they
you
already
know.
fixed a timetable. Blessing.
There's already a timetable for you. Check your WhatsApp.
Yes, there's already a timetable.
I'm listening.
It's only for Saturday.
I don't know if there's going to be
for Sunday.
Okay, let's talk that timetable. I'll let you know.
I'm
Then
asking
what I
for
want to,
Sunday, not Saturday. I'm asking for Sunday, not Saturday.
I
There
will
is
let
only
you
for
know. So you can
Saturday.
see how we are finishing this. So I want us to end this class. So for those of your colleagues that are online, please, for those people that are online, I beg you, please, I've sent an assignment to your WhatsApp. Those of you watching this on YouTube, and I want to also say this, when you watch on YouTube, if you don't understand anything, drop your comments. I will attend to your comments. If you can't drop your comments, you can easily send me a WhatsApp to this number 080-522-80602. Direct your WhatsApp question. So I'm going to attend to you. So please, if you want to know about Riskfree, you can go online or you can just call this number, send me a WhatsApp, and then we are there to meet your needs at Riskfree. Thank you. Please, you can also check some of our other videos by other colleagues of mine